Okay, so welcome everyone, I'm Config Jason, and today I will be doing some market updates instead of an educational video. Although if you have something to suggest in that regard, please let me know in the comments. If you don't follow me on Twitter yet, make sure you do. I have posted a summary of what I'm going to cover today right here. Also subscribe and like the video to make it reach a wider audience. Let's get started. So as I said here in the thread, I want to talk about the FOMC, and I wanted to talk about some current market biases and just commenting on the overall state of crypto. So first we'll go with the FOMC. They hiked 25 BPS in May, in case you don't know, but I want to focus on the future. So it's basically 91% that we stay at this level, which is 500, 525 BPS. This is the CME. These are CME contracts for the next hike, or any hike to all the way to December the 18th, 2024. So this is practically what market expects to happen, and usually the market is right because, of course, they take the information that is given. So yeah, 91% priced in, no hike, 8% priced in, hike. Nothing too special here. We'll probably see no hike if it keeps being like this. For our next one, we got 36% for an ease, 58.6% for a pause, and then 5% for hike. Nothing too special either. Then we got 76% ease in September, and finally in November we will be surely below. Although I want to say that the more in the future you go with this, probably the less accurate they should be. Of course, we had no summary of economic projections in last FOMC, so we're currently at the target rate. That's why also there's expected to be no hikes. If you look at the dot plot table, not chart, sorry, you see it's 525 here for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 members of the Fed, and then 3, 6, 7 above, 1 below, and this other, which is, I don't know, the outlier, or I don't know. This is the red dots is the effective rate implied. Okay, so the red was the current rate in January, and this is what most Fed participants think. Okay, so I go also talk a bit about what Powell said in the conference. Nothing too relevant, not too much to add to what I already said, but he pointed out changes in the statement which comes along with the rate hike decision. He talked about how slowing down was the right move and kept saying there needs to be more evidence, the CPI and the unemployment rates, whatever. So this is the CPI chart for the last year. It was 8.6% in May, and there's been a substantial decrease in the CPI, but still well above 2%, which is what the Fed targets. Like, he got asked if 3% would be a good target, even if it stays around 3% but doesn't really reach the percent. Powell said that wouldn't be reaching their goal. So he said there needs to be more evidence until they cut. CPI decreasing at this rate, though, will mean that we're on the good path towards 2%, and we should see some cutting by September, I guess, as we saw before in the contracts here. So yeah, if you look at the BTC chart, I want to go into crypto now, as I talked I talked enough about the FOMC. I really want to go into details with these things because they are not as relevant to crypto as they could seem, or maybe as relevant as they were last year when there was good PA. But you see, there's barely anything during the days. This is quite calm. Before the FOMC, we get some kind of rally. Then during the FOMC, we get some down. And finally, post FOMC, just go up 1K from like 28.2 to 29.2. This is barely 1K move. Wouldn't really say this is significant at all. And then if you look at this is just some chop. Really, really, really boring chop. I'm not trading this myself, by the way. And of course, stating that macro getting like better is the reason why Bitcoin is not moving would be wrong, or at least partially. But if you look throughout the entire year, there has been a shift towards shitcoins. From AI, China, you name those narratives that popped up during January, February, and from literally, PP. Like it's hilarious, all that shit. And no, I did not buy that. I did not make money. But yeah, I'm still holding the same BTC bags. But there is some certainty in macro. Like it used to be really uncertain whether we will hike 50 bps, 75 bps. I remember all that. Practically last summer, fall, and now it's like everyone agrees on that, and everyone agrees. Like it's been like this for the last maybe couple FOMCs, and I don't really know if that would be a cause for shitcoins to move like this. But since crypto is crypto, you can really know if that was the cause or it was something else. But if there was TradFi, macro getting better would be beneficial for risky assets, for risky stocks. And to that extent, macro would have helped for everything to go up, for BTC to consolidate, for shitcoins to go up. But it can't be like that to 100% because, again, crypto is crypto. And now for my thesis for Bitcoin here and the like short, medium term, I go to the 4 hour, maybe to daily. I have this nice value area here. Just ignore that. Like I will cover volume profile in a different video. I already have it in a thread, but for now, just keep it simple. I think we will continue ranging for a bit, at least until like June or something. Just continue this line. Even if we continue ranging for a while, I think something will end up breaking. Like something with this shitcoins again something will happen. We have like a catalyst narrative for BTC and the overall crypto market to go down a bit. Because I see greed, but at the same time, I just don't really see it. It's not like 2021 vibes, definitely. Like, it's not a real bull market. Something will end up breaking that, in my opinion. Like, maybe just an assumption, maybe you can say I'm wrong, but it was all about my biases, about how I see the crypto environment now. And there will be some sort of wipeout. Again, probably towards this 25, 24, 23k zone. Maybe even lower towards 22, but I would doubt that. And I'm not selling either, by the way. So, if it suddenly goes to 35k, I wouldn't be, seething. I would just wait and hold my bags, my corn bags. If it goes to 23, 24k, I have cash. Like I have 33% of my port to keep buying. I wouldn't be in a bad position anyway. So yeah, I think that mostly covers my biases. I didn't really want to make like a TA high time frame. I don't really do TA anymore. I just do order flow, look at maybe one or two VWAPs, like volume profile as you saw there. And this kind of fundamental analysis based on my Twitter timeline. Because I haven't done much lately, the market hasn't been the best for me. And I have been focusing on many other things outside of trading. The teaching on YouTube included, shit posting on Twitter, building, touching grass. I definitely don't want to touch stuff like PP. Like this, how much this has this gone up? Like since BJet listing. Like this is a 3.2k%. Hilarious anyway. Yeah. Yes, just can't really do this. So yeah, I hope you enjoyed this rant. It was more a rant than something to teach, but also hope like you learned something maybe about the FOMC. That was the more educational part when I talked about the contracts, in case you didn't know. So again, if you like, just subscribe, like, follow me on Twitter, this kind of stuff. If you have any suggestions for future educational videos, I'm open to that. See you in the next one.